You can make a little bit of money with them, you can make a lot of money with them, or you can completely lose your investment altogether. But what are stocks? I'm Nick. Welcome to All Our Questions, where I search the internet for questions that we all want answers to, and I answer them starting right now. First, you should know that stocks and shares, in case you've heard them being talked about separately, are the same thing. To put it simply, they are basically a measurement of ownership of a company. If you own stocks in a company, you have a claim to everything that company owns, and you're known as a shareholder. And real quick, let me know down in the comments below if you currently invest in stocks. Each stock has an individual value. For this example, we'll say $1. If you want to buy 10 stocks, then you would need to pay $10. The real life dollar amounts can actually scale pretty high per each individual share of stock. Corporations sell portions of their business through stocks so that they can raise money, and in return, they work to make the company more successful, which in turn makes the value of the stock go up. The value of each company's stocks are measured by how well their business is doing. Stocks rise and fall throughout the whole day, and buying and selling of stocks around the world occurs millions of times every second. If the company you purchase stock in is successful over a long period of time, then the value of the stock that you purchased is going to rise. And when that happens, you're basically making a profit from that company without having to do any of the work, which is a pretty cool deal as long as the company continues to be successful. If a company performs poorly, they are in danger of angering their shareholders, who can vote to fire the leaders of the company. But in reality, most shareholders don't have enough shares in order to have any real influence over how the company is run. That is usually covered by billionaires and extremely wealthy people who actually buy a large percentage of stock in the company. While owning stock in a company technically makes you an investor, it helps you avoid a lot of the risks that come with investing in companies in other ways. For example, if a company goes bankrupt or goes into millions or billions of dollars into debt, nobody's going to put you on the hook for that money, so you have that layer of protection. Now, on the downside, you're still going to lose your investment. Like in the financial meltdown of 2008 and 9, where people lost their fortunes and savings, and we're even still dealing with the effects of that crash. That is what stocks are.